What's up everybody, I'm Adrian and you're watching Drive to Thrive. In today's video I want to do a breakdown of the stock market, especially with all this craziness that's going out there and this crazy pullback that we've had over the last couple of weeks. I have lots of people that come up to me and ask me what I think about it, what are some of the levels I'm watching. So let me dive into this deeper in this video. So I'll be looking at the Qs, the SPY and IWM, and if you stick around till the end, I'll do a bonus breakdown of one of my favorite stocks. So let's get started. Alright, let's take a look at the Qs over here, and as we can tell, since around October there, just before the election, we've had this parabolic move up of about, let's see, 26%, yeah, 26%, right? So it's kind of normal that a market would pull back after such a crazy move higher. But the question is, did the bubble just burst? You know, should we be worrying about this? Is this normal? So let's dive in a little bit deeper. So as you can tell, I have this trend line drawn over here. This trend line's been holding since about June. You know, it's been following it along nicely. We had few breakdowns, but you see that we always bought it up, bought it back up, and then had this parabolic move, like I said, since October. And what has just changed is we broke this trend line. We have retested it right here, and we got rejected, and off we pulled down. You know, then we created this head and shoulders pattern right here. So here's our, let's grab the pen. So here's our one shoulder, here's the head, and here's the second shoulder. Here's the neckline that we just ended up breaking today. So that's a big deal. That kind of tells me that all of a sudden this is definitely bearish in the short term. Again, we saw us break the support, get retested over here, and rejected. So when this happened, I was still pretty bullish, and I thought that, hey, you know, this is just gonna bounce back up. But when I saw that neckline break down, it definitely signals a bearish sign. And for a typical head and shoulder, it's about the distance from top to bottom is what you can expect for a correction. So if you take this into the neckline, that would bring us down to about that $287, $86 level, which is just around the 200-day moving average. So let's talk about this 200-day moving average now. In my eyes, 200-day moving averages are a great indicator of whether we are bullish long-term or if we are bearish. And as you can tell, since we crossed over in April, we've just been doing nothing but heading up. You know, we've stayed about it. We never really retested at this 200-day moving average, so it's very possible that we could, you know, come back down to these levels. And that's where I'll be watching, you know, real carefully is, are we going to find support here? Are we going to bounce up? This would also correlate with the trend line I have down that goes back to 2016 of the lows, you know, that we've been kind of bouncing through, and then eventually in June of 2020 we broke out. So there's definitely a few more levels before I start to panic and sell everything and go 100% bearish, but just a few levels to watch out for in the next couple of weeks and possibly a month. Now on the SPY, we have similar kind of scenario. You know, we've been going up since October, since the election. You know, we've had this move up of 22%. So again, just a healthy correction. We got our support level here that we've been playing around with, that seems to always get bought back up as soon as you go under, and that's kind of the same thing that happened today. We hit this level of 372, and then it just got bought up in the afternoon. So that tells me it's not as bearish. We still haven't formed a lower low. As you can tell, here's our prior low, and here's our current low. So we're still in an uptrend. So I'm feeling a little bit more optimistic on the SPY. Now let's take a look at our MACD, what it's telling us. So on the 4-hourly, we're just crossed over the zero line. Our stochastic is down on a daily, you know, we're still in the bullish territory again, haven't crossed over the zero line. And for those of you who are not quite sure how to use MACD and stochastic, leave a comment below, and maybe for my future video, if there's enough interest, I will explain how I use this to kind of set up my trades and determine which directions we're going in. So not looking as bad on the SPY, not worried about it. Again, if we come back and retest this trend line, which is quite possible, that'd be another, let's see, another about 3%, you know, of downturn. And then I'll be watching this level real carefully. Do we bounce off of here? Do we start breaking it down, you know, particularly if we start seeing some breakdown patterns where we break through it, come back up, and then if we get rejected at these levels, the trend line, then I'm definitely going to be looking to get short and start buying some puts. But for now, not too worried about it. Now on the IWM, which is the Russell 2000, we did just hit this trend line that goes back to 2010. So now every time we kind of come close to this trend line, we've had a reaction, you know, right over here, and then we haven't really tested it till about now. And this is, I believe, the extreme level of this trend line. You could definitely draw it in different ways to kind of cut it down, but I did find this interesting that we did hit it, and we are definitely seeing a move down. So again, how low can we go? Well, that all depends. Let's see. Here is our first level that I was watching was this 216. As you can tell, we had this nice support, and then again, every time we would kind of hit this level, we just got back, bought up, but then today, again, we broke this. However, same like with the SPY, here is our prior low, and this is where we are right now. So currently still in an uptrend, still not too worried about it. And for those of you, so if I draw it something like this at the very low, you see we still have the uptrend barely, but this could just be a bear trap, and then we just buy it up, and then we go and retest the previous highs at 230. But only time will tell. So that's why I'm not panicking completely yet. This could just be, like I said, a healthy pullback on all these markets, and we could be heading higher, right? But then definitely on the Russell, once we start breaking this and we see confirmation, something similar like what we saw on the Qs today, where we break down and then we have this rejection at the support. So I'll be looking for the same kind of scenario happening on Russell, you know, do we get rejected over here or do we break through it? If we do get rejected, then our next level is going to be the 205, and then I see a juicy gap over here that never got filled, so that could be a possible another level lower. And of course our 200-day moving average, that same hasn't been tested since November, October of 2020 here. So yeah, lots of room to go down, lots of room to see what happens from this, but stay patient, stay smart. I mean, I'm not buying everything up, I'm just trying to wait for the market to show me which way we end up going. But I'm definitely holding on to my positions and just kind of watching them carefully. But as soon as I start to see some weakness, I will start buying a little bit more puts. Actually today, after I saw the rejection on the Qs, I did end up buying a couple of positions just to hedge myself. But again, I'm primarily still bullish. My portfolio is still heavily bullish so far, so we'll see what happens. Alright guys, for those of you who are still with me, congratulations. We are starting to wind down here, and as promised, let me tell you a bonus talk here. And by the way, if you are still watching, leave a comment below, say still here, still learning. Let's break down Apple. Now, just like the rest of the sector, Apple has been quite bullish over the past year. You know, if you go back to the March lows to the highs, we've gained over 170% on Apple alone over the last couple of months though. However, we have been in this range over here, where, you know, it seems like this could be a range between 140 and that $113 mark. So as you can tell, we did break our previous support. We kind of retested over here, got rejected, and now we are on our way down, I believe, to retest the 200-day moving average and this $113 level. So this is where I'll be looking to either buy into the upside, or if we can't hold this support, then perhaps, you know, be looking to start shorting this thing. Now what happens, you know, if we do find support, if we do hold from here, you know, so I'm starting to see, I'm going to be looking for this pattern where we maybe like start consolidating, maybe some breakout from here, buy this and go higher. Or if we can't hold it, then possibly, you know, again, just look for these failure patterns where we break our support, we go back up, retest, and over we go. So this is where I'd be looking to get short. Now, as of today though, my bias is bullish. We haven't broken this 200-day moving average. We haven't really broken the support level at 113. But if we do, you know, then what are some of the levels? And there is one that I have in mind. So if we do start breaking the $113 support, then we got this juicy gap over here that never got filled that I could see as a potential target. And then if we really start selling off, then there is another couple ones, you know, down here, one at somewhere around the $61 mark and the other one at the 58. So, you know, this kind of would be the ultimate bottom if this thing just really starts dumping. But in the short term, you know, let's watch the support level at 112, because this will give us an idea if it's a good time to start buying long, or if we should be getting out of our long positions and perhaps starting to get short. So let's take a maybe quick look at the MACD here. So on the daily, our MACD has crossed over the 0 line, which means we have a bearish bias. You know, our stochastic does have some room to go lower. If you go in further out on the weekly, you know, we are hitting our bottoms on the stochastic here, but our MACD definitely has room to kind of get towards this 0 line. So definitely exciting times, definitely time to be patient as well as a little bit, you know, aggressive when it comes down to it. But for now, I would just sit on the sidelines and let's see what happens down at the $113 level for Apple. Alright guys, thanks for watching. I hope you got some useful information out of this. If you did, please don't forget to smash that like button. As well, at the very least, you know, if you enjoyed my drawing at least, as well, smash the like button, it helps me greatly. Also, maybe hit the subscription while you're at it, hit the notification bell, and let me know in the comments below, what do you think is going to happen in the upcoming weeks? Are we going to go higher? Are we going to go lower? Are you panicking yet? Are you buying the dip? What stocks are you following? You know, let me know in the comments below. I definitely appreciate each and every one of you, and we'll see you next time. Cheers.